Hello and welcome everyone. Welcome to this live session with me, Mohak and I welcome you all. A lot of new faces over here. This is a free session for all, and I hope you all can see my screen. Just to begin with, uh, there are people having some issues. First of all, I want a quick raise of hands. How many people are able to hear me clearly and see my screen clearly? Very, very clearly. I want a quick raise of hands. Okay. Mr. Lalit, then a lot of people are being able to, in fact, everyone is able to see my screen clear. There's no other complaint. So I think, Mr. Lalit, there's some bandwidth issue with your internet. Maybe that is the issue. Maybe by you hang in there, it will come on its own, maybe, right? Hi, everybody. Yes. Very good morning. Very good morning to all of you. Very nice to see new faces. There are a lot of you over here, and yeah, there are a lot of you over here. We are about to start now. Okay, fine. Everybody settle down. Okay, there's a button out there to raise your hands. I hope everybody can see it as they are coming in. So if I ask you something to raise your hands, you can raise your hands. And the second thing is when it comes to the questions, there's a box out there to ask questions if you want to ask questions, right? So please do that. You can send me a hello and see if that works, right? Perfect. Perfect. Hello, Mr. Akib. Acha, is my voice audible clearly to everybody? Because some people are facing issues with the voice. Is it clearly audible to everyone? Yes, it is clearly audible. So maybe for some people it is this thing. So I'm just trying to keep it loud and clear. My camera is also on. So some people will be able to see me, but then I'm keeping my camera off for the time being so that there's more clarity on the screen, right? Hi everybody. Okay, everything is crystal clear is what I'm getting as a review. It's because there's so many people over here. Sorry for the delay. So there were some personal messages me and my team were getting in order to get you over here very comfortably, right? I hope everybody is ready for this jam-packed, amazing session which is going to be there. The one good thing about doing this online is that even though it is jam-packed, nobody can feel it's jam-packed. So everybody feels comfortable. So let's begin. So this week and the last week has been quite interesting for the markets, predominantly as a lot of catalyst action has happened due to the news which has been there. Okay, uh, my heart goes out to the families, and whenever I talk about these things with relationship with markets, I really feel that my heart goes out to the families of the martyred, and we also have to acknowledge the fact that we have taken a very strong and tough stand against terrorism in many ways. So I congratulate the army, the government for that. Amidst of that, there has also been a lot of news which has been clouding the markets. And with regards to that, the first question which I will take up, which is one of the most frequently asked questions to me, and that frequently asked question is one and simple. That is, sir, how do we trade on news? Or is there an impact of news with technical analysis? How do you justify that? Okay. How do you justify that with technical analysis? So, um, what happens is, what happens is that जब भी हम देखते हैं there is a news, okay, हम देखते हैं कि there is a news which can affect the economy, which can affect the macros, and it is drastic, it is sudden, it is out of the blue, right? The real reason why prices are going up and down is because real buying and real selling is happening. It is not because there is some magic wand which is there. There can be a positive news. For example, if there is a monsoon or monsoon bahut acha hai. Okay, so in that case what we will notice is that the monsoon will uh, be there as a news, maybe act as a catalyst, but you cannot ever say with full certainty that how much Nifty is going to go up if there is a good news regarding the monsoon. Right. Secondly, is that when it comes to technical analysis, there are a lot of formations on the chart, there are a lot of patterns on the chart, and there's a lot of play on the chart which is going on simply because of real buying and real selling. When you are studying the price, you have to understand the price is the reality, right? The news is not the reality, the balance sheet is not the reality. A good quarterly result of a company does not decide your M2M. What decides your M2M is the price. What decides your entry, profit, loss, everything is the price. So when we are studying the price, one of the primary things, and if you want to become a full-time trader, how many of you here want to become a full-time trader? Please raise your hands. How many of you become a full-time trader over here? Right? Right. It is really a dream job, right? And it's really something which I really personally feel that is very much misunderstood by the public. When I started trading, okay, I did not know so much about price mechanism. However, I had a very deep interest in the same. Right. So I'm seeing a lot of messages. They're saying they want to become full-time traders. So what happens is that once you enter the market, it is very obvious to go on Google, it is go on YouTube. There are a lot of people who follow me on YouTube, right? And you want to find out what technical analysis is about, how I can study the price mechanism, how can I profit from it. You must do that. But I would also say if you really want to take up a business seriously, I want to not just build a business but run it successfully. You are supposed to know a lot of ins and outs of technical analysis and technical trading, which just doing one simple Google search does not give you. Many people fall under the trap that, okay, fine, there is something called technical analysis. I'm being able to see my analysis match up with the price or price movement. But then I read about a candlestick pattern perhaps. Then I go in the market and try to look for it. In the hurriedness and excitement of doing that, I sometimes don't see it working out. And therefore I feel very, very demotivated. Right? So the first thing you have to understand about trading is that your goal should be to preserve your capital and your goal should be to understand the risk factors which are there in this environment. The second goal, and this is one thing which most people don't pay attention to, the risk factors. And once there is a perspective laid in place where you understand that technical analysis is about probabilities, it is not about certainties. When I say probability, how do I define probability? I define probability via subjective probability. Okay, there's a subjectivity involved, but there is a way. If you have various concepts of technical analysis with you, there is a way where you can go and clearly trade with a lot of confidence and capture the big moves. Now, what do I mean by a technical strategy or a technical setup? A technical strategy or technical setup simply means that when there is a lot of noise on the price charts or when there is a lot of price movements which is not explainable through any concept, I do not enter the market. I enter the market when my edge is present. There are a lot of people who actually have a lot of unreal expectation with markets. Right? There's a lot of people who have a lot of unreal expectation with markets. So when they see that one day market has moved a lot, the next day they expect the same thing to happen. And very often it does not really go and happen like that. In that context, let me tell you that personally, when I'm trading, I really look for only those places where my edge is directly present. If my edge is not present, I do not enter the market. I do not make my views. I do not make opinions. I do not waste time discussing with people where the market may go. There is a collective psychology of a lot of buyers and sellers who create a lot of conviction in the markets on one direction. That is how the big moves happen. So let's just take up the chart of IndusInd Bank. Before I go ahead, those who are watching this on YouTube, they can subscribe to my YouTube channel, and those people who are who have come through YouTube but don't know about my Telegram, right? They should subscribe to my Telegram channel. The link is given below in the description box. So let's take up the chart where I've just posted on Telegram about IndusInd Bank being very bullish. It's a short-term bullishness which I'm looking at. In front of you is the hourly chart, and there is a lot of things I'm seeing on the chart, not just one. And as I said earlier, that a lot of things, all of them based on probability. And when those probability come together, so for example, I'm looking at one concept of technical analysis that will have a probability where it can subjectively tell me that okay sir, 70% chance है ये ऊपर जाएगा. सिमिलरली अगर मेरे पास ऐसे दो तीन वेरिएबल और आ जाते हैं, तब क्या होता है कि मेरी स्ट्रेंथ जो है उस प्रोबेबिलिटी को कैप्चर करने की वो ज्यादा बढ़ जाती है, कन्विक्शन ज्यादा बढ़ जाता है. ठीक है, तो मेरे पास जो अभी सामने सेटअप है उसमें एक से ज्यादा चीजें इन्वॉल्व है, लेकिन मैं आपको एक सिंपल तरीके से आइडिया देता हूं कि कैसे मास साइकोलॉजी जो है वो यहाँ पे प्ले आउट हो रही है. और उसके बाद हम आएंगे निफ्टी के चार्ट पे और देखेंगे कि अभी जो ब्रॉडर मार्केट है उसमें क्या हमें इनपुट्स मिल सकते हैं. ठीक है, तो सबसे पहले लेट्स टेक अप IndusInd Bank chart. Okay, I will leave the forum open to questions. All the questions will be answered. Nobody will be left out. I promise you that. Right? Some people over here are saying that सर आपकी इंग्लिश बहुत टफ है, और सब बोल रहे हैं, कुछ लोग बोल रहे हैं कि सर सिर्फ इंग्लिश में बात कीजिए. Okay, so I'm going to keep it in English, and those people who want to talk to me in Hindi, they can connect with me after this webinar. So I will explain whatever is required. Since this is going on YouTube also, perhaps I will stick to one language, and we have people from different parts of the India and some from outside India also. So we're going to keep that in mind. Okay, so let me just zoom into this chart. This is the daily chart. This is the weekly chart. Okay, and then there is the hourly chart which is right in front of you. As you can see, I can make it the 15-minute chart also, etc. So first step, let me zoom in to this area where I'm looking at. Okay, now this area is a price band which I'm looking at, of clearly seeing 1495 on the higher side, and at a lower zone I see 14 around about 1458, right? So when I see this price band, what do I understand from this? I understand that the price for the last 1, 2, 3, 4, 5, 6, 7, roughly 7.5 days or 7 days has been hovering in this price band. Okay. When people talk about buying pressure or selling pressure, what do they mean? Right? What do they mean when people talk about buying pressure and selling pressure? Right? Somebody's just messaged they can't see the chart. My side everything is fine. Okay, so let's just focus on this. Right? What does buying pressure and selling pressure mean? When there is a buyer and seller, suppose you are buying a stock at 1,000 rupees, right? And somebody, you want to buy the stock, you place a bid that okay, I want to buy 100 share at 1,000 rupees. At the same time, there's somebody who comes and says, I want to sell 100 shares at 1,001 rupees. So there's a gap between buyer and seller. Okay. So let's take for example, over here we have Mr. Arpit. So Mr. Arpit is the seller. He's standing at 1,001. I'm the buyer. I'm standing at 1,000. Okay. Now, is price going to be an agreement between us? The last traded price will be an agreement between the last buyer and the last seller. But when this price fluctuate, it is only because there is a disagreement going on continuously. He does not want to come down. I do not want to come up. Therefore, I ultimately either we're going to come closer. I'm going to offer a bit 20 paise higher or something like that, 30 paise, 50 paise higher. The other thing which can happen is where ultimately a trade will be taking place, is when I hit Mr. Arpit's bid offer or he hits my bid. तो अगर वो बोलते ये लो 1000 रुपए में ये स्टॉक के 100 शेयर ले लो मैं मार के बेच रहा हूँ and somebody says I want to hit and buy, so that is how a transaction is happening. So clearly, if me and Arpit are standing, Arpit is having 1,000 shares, 100 shares at 1,001 rupees, right? He wants to sell, I want to buy at 1,000 rupees. Ultimately, either one of us is going to hit the other party and finally create a trade. And when the trade is created, eventually what will happen is there will be an agreement between the buyer and seller. And when there's an agreement between the buyer and seller, finally we are going to see that a trade has taken place. So who is going to be the more convinced party? That party is going to buy or that party is going to sell. The more convinced party, right? And this sort of agreement and disagreement will always, always create price fluctuation. When there's a price fluctuation, it is because that there are very strong sellers and very strong buyers which are convinced. Okay, so over here we see in the last few days we are seeing that there are very strong buyers and strong sellers. I'm trying to explain the most basic way possible. Okay, a lot of people are new over here, right? So there's a lot of strong sellers which are standing over here. A lot of strong sellers are standing over here. So there are many sell orders which are lined up over here, right? And there are many buy orders and buyers over here which protect this area, who are very convinced that at this area it's a very strong place to buy this particular stock. When we see what we call a breakout happen, so what is the breakout point? This area 1495 is the breakout point. When we see that the breakout has happened at this very point, and this is an hourly chart, so the time frame of our trade, the time frame of our understanding is hourly, right? I'm using a particular charting platform, so when I talk about it, some people are asking questions. Okay, so we see that this continuous movement has led to a breakout. When this breakout is happening, technically we talk about it as a breakout, but on a mass psychology level, there are a lot of these strong sellers who are standing and all their orders are taken out by highly convinced buyers, because people like me and you understand this. People like me and you cannot put so much selling pressure that it can go lower. People like me and you cannot put so much selling pressure. People like me and you cannot also put enough buying pressure that it goes up and breaks these areas and takes out all the sellers. So obviously, when there are very strong hands involved in the market, the technical analysis study helps us to understand that the stronger hands, which direction are they placed in. And because each one of us cannot really directly influence the markets, we want to get into those moves where stronger hands are involved. So when this breakout has happened, on a very simple level, I'm saying when this breakout has happened at 1495, I have entered a trade, right? When I've entered a trade, I'm seeing that this stock is now moving in a direction because all the buyers are far more convinced, right? So my dominating trend now becomes bullish on the hourly chart. And if I really see, suppose I miss out on this trade, so when I see it giving a little bit of dip, where my risk to rewards are very clear, I will go and buy, right? So this is a risk reward game. This is a probability game. So can this happen that market can come a little bit higher and then go back down again? Yes, it can happen. Okay, can this happen that it can really go very high today itself or the next 2-3 days? Yes, it can happen. The whole point is that we need to understand, because there are probabilities involved, we need to understand that we need to manage the risk and we need to manage the risk reward. So if you have got three things in place, one is the technical strategy, two is the money management, which is risk reward, taking profits, etc. And the third most important part, which I always talk about, is trading psychology. If you've got a clear thinking going on, you can pretty much easily exploit the technical strategies, right? A lot of people who come to me and they say they want to learn technical analysis from me have some clutter in their mind, have some subconscious and belief systems, right? Which, uh, yes, Mr. Rakesh, that will be happening. Don't worry. Yeah. So those subconscious belief systems which they have that make them take the incorrect actions, right? A lot of people are like that. So if you go to my YouTube channel and see that there are videos on trading psychology also, I really talk about the few things which everybody needs as a as a trader in their mindset. One is a probability based thinking. The other is proper position sizing and proper risk management. And the third is the most important thing, a unlimited sense of self evaluation. Most of us are falling into the trap that you can earn so much in a day, so much in a month, so much in a week. So when the market is giving you more money than you can earn possibly doing something else in a matter of one day, you kind of fail to digest that subconsciously. You kind of fail to let your profits run. You kind of fail to think clearly when you're supposed to, right? And what happens is when those subconscious belief systems come in, right? Sort of tend to make one wiggly when the market is moving up and down. Right now, as we spoke, the stock moved down, up, down. It will trend higher. It is not that every trade has to go just like this vertical 90 degrees. No, it will trend higher. So the trend is your friend, as they say, is a common adage, right? Right. So that is how I'm talking about it, right? Okay, Mr. Pratik is saying this video is available on YouTube because we're 10 people watching at a job location and we have some work. This video might be available on YouTube, so don't worry. And otherwise, also my YouTube channel is there, out there. You can have a lot of learning from there. There are a lot of videos over there. I would suggest you go and explore everything, Mr. Pratik. I'm really thankful to you, right? Thank you so much for all the trust and the love and the following, everybody, right? So you can see that this market will trend higher. When I'm saying market, I'm talking about this particular stock. This will trend higher. This will have its up and downs. So when the market is moving up and down in the overall fashion of going up is what I'm seeing as a probability over here, and I have taken a place trade on that probability, right? So if I'm seeing that happen, all these counter trend moves and the counter trend ticks should not lessen my self confidence, right? And this is what problem happens with most of the people. They're not able to hold on to the trades which are very high probability, very clear, and they miss on the big moves of the market. So it's not just the technical strategy, not just the money management. One thing very important is the mindset which is in place, right? Also, what happens is the effect of a previous good trade or a previous bad trade is carried forward. If people take a previously good trade, say yesterday you had a good trading day in terms of just the profit amount, then probably there's a feeling of overconfidence and you don't measure the risk properly. And when there is a negative day or something which does not make you feel good, then that feeling of not feeling good gets carried forward and affects your confidence. That is not what I would like to recommend anybody to fall into. Right? As we are speaking right now, I'm seeing this trend higher, slowly and steadily. I'm not going to be very excited if it goes up, but I'm trying to tell you that sitting through a trade is very comfortable to do if I'm confident about my strategies. Now, there's not just one breakout, there are multiple factors I'm looking into so that I keep this video very simple and easy to understand, and so that we can explore more stocks with the similar basic principles. I will keep it to this as far as the explanation is concerned. But I'm confident about my strategy that the probabilities are high, and therefore I like to play this strategy out. Mr. Kumar Mishra is asking a very interesting questions. A question. He says, I have 1.5 lakh as capital. Should I enter into futures market? Very good question, Mr. Mishra. And this will answer a question in everybody's mind. How much capital is required? How much capital is enough? Okay. Number one, let me tell you, no capital is less. Every capital can be used in the right manner. Number two is that for different instruments, different capital and different trading style uh, for different capital is applicable. So if you're talking about doing trading on futures, if you're talking about purely intraday trading, then I suggest you can go ahead. But when you are talking about trading on the basis of positional, then 1.5 lakhs will not be enough, because if you get just two trades wrong, it will erode your capital enough that you will not be able to trade further. So you don't want to go into a business model which is not applicable for the long term. Two things important for a business model. One, it should be long term. Second, it should be scalable. So if it's long term, then what happens is that you preserve your capital and you have phases of growth. There will be growth when the markets are very well performing, strongly trending. That growth will be very swift, and where there will be sideways market, the growth will be a little subdued. But there should be risk management in place, and your growth should be consistent across different market phases. The second thing is, if you once understand and develop the practice to do it, execute it more perfectly, your consistency will lead you to overall growth. That means today if you're trading 500 shares, tomorrow you will trade 700 shares, next day you will trade 1000 shares. I mean, not literally next day, but over a period of time you will scale up, right? So the nitty-gritties which are there behind understanding, right, needs to be placed first, and then you need to plan how would you go about your trading. That's how people should do. Somebody is asking which indicators are useful for options intraday. Okay, Mr. Santosh, let me just give a background about options first. First of all, there's a lot of cloud and a lot of fog around the idea of options, right? When you are looking at options, you think that it has very good potential of movement, but until you don't understand the Greeks, until you don't understand what are the factors which have a relationship of price to options. A lot of students who join my 15 session course, they are joining that 15 session course and they are seeing that there are two sessions on options and futures and how the price movement happens. Their perspective about option completely changes. Some of them are very fast in their understanding and observation, and they are able to trade so well with options. But there's only if there is 100% space available to trade futures, there's only a 30% available space to trade options. Why? Because options will have something called theta decay, which is called time decay. Options have something called delta, which is a relationship between the price and the underlying, between the option price and the underlying stock, which keeps on changing on the basis of gamma and vega. So the different expiries have a different equation. The different times of the month have different equation. The different strike prices of options have a different equation. When you are trading option, you should look at the price chart and you should understand what is the magnitude of move. According to that, what is the time of the month? According to that, how would you be comfortable with the risk involved? Because options will give you leverage, it will give you limited risk in the absolute term. But when it comes to the movement of the instrument, it will give a very volatile factor. How many of you are understanding what I just said about options? That it will give you a limited risk as far as the absolute amount is concerned. You can be completely chilled out that you will not lose more than this. But the volatility factor is much higher in options. Therefore, only a certain percentage of time or limited leverage can you trade options well. Am I clear about it? Raise your hand those who just understood what I said. All right. Thank you so much. Thank you so much. So, when it comes to this, to understand is there no technical indicators which will be directly applicable to options. There's an involvement of more than just demand and supply. more than just the price mechanism which is present on the option prices, right? Yes, in some charts it will seem like the option chart is replicating the stock price chart. That was true, but it is not that it is going to be always readable, right? So that would be something which you will, understand. Okay, Mr. Shu Shobhit Agarwal and some others are talking about stock specific. So let me just focus on the stocks which I'm going to talk about right now. And then when we have time, we'll talk about other things, right? I'm getting some more questions which I would like to answer, which are more broad questions, right? Um, Joseph is asking, could you please explain how to select a stock for trading? Are you tracking only some stocks regularly? Very good question, Mr. Joseph. This is one of the common, again, Mr. Ravi is asking the same question. One of the common questions we have, uh, people asking me is, how do we select the stock? Do you have a particular setup or sorry, do you have a particular alert system, etc.? Okay. Now, a few things I'll tell you. Yes, I do have some alert systems. Yes, I do have suggestions from the software. But they are not the only way. Maybe one in a few days or two in a few days, I will get some very successful trades leading out of that. But my personal perspective is doing my homework every day. My students also do their homework every day. And when we do our homework, we are able to understand that this homework is telling me so much readiness and preparation for price mechanism. So, for example, some of my students also and myself had been tracking the stock IndusInd Bank because in our homework it had very good points. Okay, so I put the alert in place when it crossed these areas. Okay, on my software you can put alerts, and even if you can't put alerts on your software, make a watch list and see the watch list. Keep it in front of your eyes. It's going to be very simple as a process. But until you don't understand the technical concept, somebody asking about a scanner will not work for you because the market moves every day in different ways. Though, if you expect a scanner to give you a result every day, it will be on a very broad set of stocks. It will be a broad different types of moves, right? So you create the scanner, but first you have to learn what technical analysis is before you can understand what indicators are, and after that you can make perhaps a scanner, and you have to understand the scanner in and out to be able to understand how it works. Second thing is, it is not necessary to use a scanner or alert. You can simply create a watch list. Track a set of stocks which you are comfortable trading according to their volatility. Do your homework. Some of my students are so sincere. The most highest performing students are the ones who sit with at least 100 to 200 charts on daily chart basis every day. They give 1.5 hours to 2 hours to the homework and they profit very frequently. I do not want to boast too much about it, but yes, it is very frequent and very high flying results that they get, right? And each one of them has a different style. So if you're thinking that there's a scanner which is going to talk about, okay, fine, this is a scanner, this is going to show you X and Y and Z kind of moves. So it will be applicable only for that. When you learn a broad scenario, first you have to understand there's a broad scenario of technical analysis. Okay. Once you understand the broader picture, you have to understand there will be different styles. So let me categorize that I know four traders who have four different styles, right? And all these four different styles are completely unique to their personality, and all of them are consistent. But trader one does not take the trades which the trader three has a style of taking. So first you have to understand the broader picture, then zoom into what are the trades which you identify well, are comfortable in trading, are attracted to the risk reward in the execution category of, then you will be able to take properly, right? Mr. Sanket is asking a question for beginners, what kind of capital is good? Which trading one should start, options, futures or cash? Is it possible to trade with a job? Okay. Um, okay. I will say that. Mr. Sumit is asking about you have a course, which yes, I do have a 15 session course, which you will see post on Telegram about. So anybody who wants to join and know more about the course, you can send your number over here in the question box and my team will call you. Okay. So you can send your number. Okay, now coming back to the question, Mr. Sanket is asking for beginners, what kind of capital is good? Okay, Mr. Sanket, the kind of capital will obviously depend on your risk appetite, depend on how much you are ready to sort of be carefree, trading carefree about, right? So if you have a bank balance of 1 crore rupees, it will be a different equation. If you have a one bank balance of 100 rupees, it will be a different equation. Right? But for starters to learn, I would suggest that first learning should happen by a lot of observation. It's been okay. I'll tell you a little bit about myself. It's been 10 years in the market now. I started completely on my own, and eventually I got a lot of higher education from Chartered Financial Analyst course, Chartered Market Technician course. I've been a guest lecturer in one of the colleges in technical analysis. I've also worked as a technical analyst, as a trader in different firms. I've traded independently, and the last 4 years I've teaching also. Okay. So, with all these experiences and interactions with a lot of people, the first thing I will say is when you are having a lifestyle in a job, okay, like for example, Mr. Sanket is asking, I have a job lifestyle, so how do I trade? You have to understand the dynamics of studying the market and executing the trade will be different from you than somebody doing full time. So, if you have a job, I would say first you understand, learn, make notes, observe, do some paper trading, and then you can have a capital size, say of 2.5 lakh, 3 lakh rupees, excuse me, 3 lakh rupees. You start with trading one lot. You give yourself room enough that you're completely carefree about it. And it does not mean carefree in the sense you take any trade. I simply mean that because you're carefree, you are able to execute trades more coolly and calmly, right? And you take the broader time frame. So technical analysis is fractal in nature. If I showed you something which is working out in a certain way in the Sin Bank, okay, there will be some other stock where something will be working out of a similar nature in a smaller time frame, in a bigger time frame. Okay, so what I just showed you over here on IndusInd Bank, if I take up any stock where in the previous, you will see on the daily chart these kind of moves have happened, and this is the hourly chart. So different stocks and different phases of the markets will move differently. Okay. So you need to zero in into those things and decide accordingly how much you are comfortable trading, how much confident you are about your risk and your rewards, right? So that is how you start. I would say something like a 3 lakh for starting with one lot at a time is not bad. The initial, I would say, more than the capital, see, the biggest capital you have is knowledge. You need to understand how the market moves. That is the first thing, right? I'm seeing some people have sent their numbers in. Anybody who's interested can send their number and my team will get back to you. I will talk more about the markets and your questions now. I'm getting a lot of interesting questions. I hope I've answered your question, Mr. Khandelwal. Then Akhilesh is saying widely used software in the market as a signal generator, live screener, alerts. Please tell. Okay, Mr. Akhilesh, hands down, I'll tell you, I have seen traders use free chat platforms and make money. I have seen traders with a lot of softwares and this and that and thousands of things. If they're not keep able to know what they're doing, that's a problem. The first thing is you all need to understand that 20 years back, when there was less technology, that time also 95% of the people lost money in markets. Today, when there is more technology, still 95% of the people lose money in the markets. So, how much do you credit software? How much do you credit signal generators, etc.? Right? This is one thing I tell you. I'm here to talk about how you can read charts, how I can teach you how this entire science works. So this is the whole purpose of this webinar, of myself, and this is what I stand for. Any kind of Say for example, paid call services and uh, outside things. Until you don't know things in and out, it is of no use to get an alert system if you don't know how the system works, what is the basis. And if you don't know the indicators intimately, you need to know. Even when I use one indicator also, I use it by knowing it intimately first. You can use 1,000 indicators and make nothing of it, and you can use one and make a good understanding from that. So it is something which you need to explore. It is not a shortcut. When you are talking about signal generator, with due respects to you, and a lot of people who ask me this question, we are not looking for shortcuts. You have to understand that. And I'm here only to talk about the real thing which happened, the real deal in the market, right? I'm not here to say that is why I have a 15 session course, because in 15 sessions you are starting from a very basic level, enhancing your analytical prowess and going up the ladder, right? So that really helps. But if I say that I'll show you something in one day, shortcut strategy, it will never work, because it takes experience, it takes practice, it takes, but once you get the practice done, once you get the practice done, there is a lot. I keep sharing that my students, how they're performing, their reviews, etc. Your confidence needs to rise to another level. Your perspective needs to change. Almost, perspective needs to change 180 degree, right? Mr. Prasenjit Saha is asking, how do you define stop loss and target levels? Obviously, first of all, Fibonacci levels, which you're talking about, you have to understand without Elliott wave, you cannot have Fibonacci. Most people just put some line on the chart and expect that to become support and resistance. It does not work like that. Fibonacci is a very different concept. First comes the wave structure, then comes those, and that too I use very less, to be very honest with you. The second is that when it comes to targets and stop losses, obviously it will depend on what is my analysis and what is the precursor concept on the dominating concept, which would become invalid if a price point is hit. If that price point is hit, I'm out of the trade. Okay, that would be my stop loss. So it is a very subjective thing. Different kind of trades and different strategies, you will have different ways of calculating stop loss, right? Hmm. Which screener is best? Again, I'm saying you all are getting onto the track of questions where, honestly speaking, if you talk about a screener, okay, the point is that there is no best screener. You need to make a screener for your own. For that, you need to learn. That is what the least I can tell you, right? This is not the right question to be asked. The right question to be asked is probably, what are you looking at for specifics of technical analysis to what you have understood in the subject, not in the shortcut, right? I hope I'm getting my point across. Okay, Hardik is saying you explained alpha, beta, gamma using chart. You say call put expensive, reasonable price, strike price is more favorable. Okay, which strike price? Okay, so I'll just cut it short in a nutshell. I'll tell you. When you're looking at options, okay, I did not say alpha, beta. I said alpha, delta, and I didn't say alpha also. So I said delta, theta, gamma. The thing is, when you're looking at the expiry, okay, when the expiry is very close, there's very heavy theta decay. So you cannot afford to go in options until you have very big moves, either immediately or over a period of 1 or 2 days. Very big moves. When it comes to far away from the expiry, the theta decay rate is lesser. And you can even trade where the price movement has a lot of time to play out, to go beyond the strike price or towards the direction of the strike price. So if you have a big magnitude of trade in the beginning of the month, you trade out of the money calls. If you have a big magnitude of trade uh, in the towards the end of the month, you trade near the money or on the money calls and puts. If you don't have a big magnitude of trade, avoid trading options. Avoid it completely, I would say. So how your strategy needs to be placed with option needs to be observed. So you will see a strategy, you note down, observe how the option prices are moving, do some paper trading. You will understand by yourself in a matter of a few weeks and a month, a few months maybe, how things work with this. right? And of course, if you want to know completely about options, want to know in and out of options, you want to know in and out of technical analysis, there's a very detailed 15 session course which you can join with me, and you can definitely learn a lot. You know, watch more of my YouTube videos for knowing my teaching style, and then you will learn a lot about these things. Okay, Arpit is asking, please tell about emotions running through while trading in markets, especially in day trading. Yeah. Very good question. So the emotions which are running through the market. Well, the thing is that there's a lot of you can say dramatizing or going extremes with emotions when we tend to think about our habits. All emotions actually come out of our behavioral habits, and not just in trading, in life. If you ever want to achieve a goal, what is the most important thing you should do? You should not be focusing so much about the goal, but about your daily habits and your behaviors. If your habits and behaviors towards something is set and it's practiced in a good way, healthy way, then your goal will be achieved. That is the mindset a trader needs to understand. Now, when a novice trader or a struggling trader is there, a newbie is there, he has a upheavals and downheavals of emotions. In the beginning, nobody is a fool. They all trade with risk in place. They understand what the market can do. They want to be having a studied approach towards the trade. In the beginning, most people make money, and then they get lost in the ups and downs of the M2M, and they feel that take market for granted. They think volatility can come at any time, and they lose money, and they become completely addicted or having behavioral patterns of addiction towards the wrong kind of trading behavior, which is not something I encourage. And I also focus a lot on trading psychology in the course. I think, Mr. You have registered for the March batch, Mr. Arpit, I think. Yeah, you're the same person, Mr. Arpit. I think you've registered for the March batch. So yeah, you will also get to know a lot about those things. Um, Key important thing for a trader, a professional one, the most common thing I've seen is that you need to have a power to neutralize any any negative impact of any other thing. You should not have things around you, be it the weather, be it the people around you, maybe your traveling. You should not have any kind of those things. You had a previous loss, the previous day. Nothing should hang over in your market. You need to be able to think fresh every single day, right? That is one power. The second is the correct habits. Towards the correct habits is to keep very patient and cool and calm. The third is to have a very strong idea of trading with the broader trend. And if you're not getting anything, being okay with not taking a trade. These are the very important things one need to inculcate. And of course, I will go in further details in the course regarding this. Kumar is asking, what could be the adequate profit in a single trade in this nowadays risky scenarios? Okay, Mr. Kunal, there's no adequate profit or less adequate profit. The thing is, everything is based on probabilities. If you don't know technical analysis, then it's better you learn, I would suggest, because all the targets are based on the highest target would be based on the fact that okay, there's a low probability of going there, but it can go there. The medium target and the initial target would be based on the more higher probability. So when you are seeing that there are volatile times, okay, first of all, take trades only when they're clear. Second is have a trailing stop loss, right? So when you have reached the second target, your trailing stop loss can be the first target. How do you buy and sell in stages? What is the basic strategy behind it? That will only be learned in the course. So you join my course. It's a full 15 session course. Your questions are excellent, but I get a feeling because I talk to a lot of people every day. Get a feeling that there are some missing gaps, major gaps, which you need to cover before you can think and put your questions in the correct perspective of answers. Right. Okay, Mr. Nani Yadav, I think he's a young chap. He called me up yesterday. Oh, sorry, that was some other Mr. I think. But yes, Mr. Nani Yadav was asking me, uh, is asking a very good question. He said, what is the real turning point in your trading career? Very good question. My real turning point in my trading career was when I, in the initial stages, did very well, and then I had a slump period, which taught me a lot about trading psychology. In the process, there's not one real turning point, to be honest. It's a long drawn process, and if I have to say that, okay, there was one day where I realized, yes, this is all mental game. This is all supposed to be done in details. Was in my very initial days, maybe in the first 1.5 years of my trading, and then I really set up myself for making notes. I have thick books, not just of books that I've read and studied and researched from. I have thick books of my journals, of my research, my homework. Till date, I make it. Very disciplined way I have approached the markets. A very disciplined trading psychology I have kept. There were times as a young man where I never had any capital. So I really built on with small amount of money. Those kind were the real turning points because they really taught me how important it is to manage your risk. And of course, there were other phases also, but the initial part I'm telling you. But yeah, there are other learning curves also. Initial part I'm telling you, that would be the thing. That how, as a young person, I needed to really, in fact, the entire perspective of designing this course, 15 session, is only to give people that kind of mentorship, that kind of clarity and real deal, which I would have really wanted when I was starting my career. Yeah. Okay, Mr. Neeraj is talking about, let's talk about charts and supports and resistance. He wants more clarity on what the supports and resistance are. So, Mr. Neeraj, let's take up any chart. Okay, let's take up the chart of, say, for example, let's take up Reliance, right? One stock which probably a lot of people follow. Okay, so if we take up the chart of Reliance, okay, and purposely I have done what is I've removed all the lines from every chart I'm showing today. So there is a lot of clarity. Okay. So let's just focus back on the perspective I started. I started with saying that there are strong buyers and strong sellers. Only people like who are very having a strong backing of money and buying can create that buying pressure. People like me and you cannot create a chart like this, cannot create a candle like this. Okay, people like me and you can't do that. So say for example, when we are talking about support resistance, how do we track markets for the same? So in the front of you is a daily chart of Reliance. Okay, let's understand this. So we saw that there are extreme moves which are coming out of Reliance. I'm going to mark out each and every area in this span of chart time. I'm saying when these areas were hit, there was a sudden fall. Again, this zone, okay, first of all, support resistance is never a level, it is a zone. Okay, this was hit, there was a sudden fall, and when this was taken out with a strong buyers, there was a lot of strength which was there, right? Lot of strength which was there. So I'm going to draw that with a different pen color. So I'm going to make it green in nature, right? So this is how it was, right? Then we saw that every time prices come to this zone, the price has memory and therefore it acts in a similar manner. Okay. So the identification of support and resistance starts with the identification of interaction points. Now, what is the basis of interaction points? In full details, we go in the course, but in nutshell, I will tell you. You notice those places where there's a lot of interaction between buyers and seller. So when there's a lot of interaction in between buyers and seller, those spaces become very important for us. Okay, so for example, I look at this space. It's a very important interaction between buyers and sellers are going on. So this becomes a very important interaction zone, right? Then we zoom into an interaction point, and we notice that when these interaction points have given me uh, when I'm talking this, then I'm coming down to a different time frame, right? The lower time frame, if I see that there is a continuous testing of those interaction points, the break of those interaction points leads me to a trading setup, right? And of course, I add other factors of trading, other price structure knowledge to it, and mechanism and understanding of those variables to it to be able to come to this conclusion that okay, these are my buy triggers, these are my sell triggers. Now again, this is the daily time frame. So when you have firstly mark the supports and resistance, they become more valid when they're tested multiple times. And if I was to come down and show you something in a more smaller time frame, I would show you that sometimes interaction points don't give a horizontal support and resistance. Sometimes it leads to something we call a trend line, right? So the trend line is a dynamic support and resistance, which keeps changing with time. And there are rules to make these trend lines. And the break of supports and resistance, just like the break of trend lines, have their similarities over there. But the property of trend lines includes that the rules of making a trend line should follow. Every trend line is not a trend line. In geometry, we learned joining 2 points will make a straight line. Most people are doing that, and they're posting charts, etc. I see a lot of social media. They just join 2 points. If I join any 2 points, it will make a straight line. Okay, there's no saying no to that, right? So them rules which are involved in making a trend line, but if you get the right trend line by understanding of the interactions and understanding how much testing is there, how much details you need to go to, how many touching points are there, then these are just the first 1 or 2 classes what I teach in. These are just the first initial steps to understanding price mechanism. But very good question. I hope this gave clarity to a lot of people. I'm moving a little fast because a lot of questions are there to be answered, right? Mr. Akib is saying, is it said that it is said that the increased volume confirms trade. How much increase in volume is considered valid? Okay. Mr. Akib, first of all, volume needs to be seen from the recent past volume, right? From the recent past volume, we need to judge the volumes. Okay. This is number one. So if there is an incremental volume from a trade trigger, which is far beyond the recent past volumes, right? Then it is valid. The other is depending on the strategy or the pattern you're looking at. There are different parts of the move. There's a throwback or a pullback, there's a correction. In these, there can be different volume patterns. I'll give a very good example, right? I'll give a very good example, right? And that on this day, there was a very high volume. There was a result day of Cadillac. And this move, which had broken these support areas earlier, came back to test these areas. So the kind of selling we saw, which happened that day, also involved a lot of volumes ultimately. So the market did not really stand up, it just went down after going back up. Heavy volumes were involved, which are comparatively very, very high if we see the recent period. Okay. When this trigger happened to sell, that time volumes were not so very big. If you really want a detail of how volume scenarios work out, go to my YouTube channel and check out this video on volumes and open interest. You will completely get a very full detailed version of what volumes are about. Believe me, that's one of the best videos amongst the free webinars which I've ever conducted. It's one of the best, I feel, when it comes to the volumes and open interest video. You go and check it out again and again. Some of the students have seen it many, many times before joining my course, and they have loved it. And because of that, they have said that, okay, I'm super clear. I had so many delusions about technical analysis and volumes, which is clear now. Right? Mr. Neeraj is asking, okay, we'll talk about charts. What indicators are covered in this course? Okay. Mr. Pratik, there's a full detail of the course which will be sent to you. My team will contact you. Those who are interested, kindly put in your number. The full details of the course will be given to you. Right. Mr. Nani Yadav is saying, somebody is talking over here saying, let's discuss more psychology. Somebody is saying more charts. We will come to everything. Don't worry. Share some of your students' success stories. You started with less knowledge and now they quit the 9 to 6 job. Oh, perfect. Yeah. So there are few students who are coming from a category that they joined me after they had left their job. Okay, they already left their 9 to 6 job and they started doing full-time trading. They joined me after that, some of them. Some of them are in the process of doing so well in trading that they have taken work from home or they have left their job completely. Okay, some of them are students who as a very well informed career, I've started taking trading very seriously. And there's someone who is who there are ladies who are, who are working otherwise and then became homemakers. And as homemakers, they also want to spend time trading productively. So their category is there too, right? So a lot of these things are there. Success stories are many. If you go on the Telegram, you see a lot of testimonials. I'll share some with you. There was a gentleman from Hyderabad who was extremely, having the incorrect habits of trading. Okay, so he met me, and that time I was doing a workshop in Mumbai, and then he said, "I want to join your online course after this workshop." And that change which I've seen, okay, this back I think few years back, I'm saying that, and I'm going to tell about more stories. The change we have seen, that those habits were completely replaced by new habits. So his mindset changed, his confidence changed. He did a lot of practice. He needed to do everything that he needed to do, he did. So this was one big change. Uh, then there was a gentleman in the recent past, again from an extreme situation to an extreme positive situation in the last few months. Um, this was in, I met him in November, and now in, I think, February. By now he's super consistent. Every time I see just only good news. Then there are students who were in college, and from college level only they started doing very well. Right after they graduated, they escalated their trading time, and really did well. If I have to use names, I don't know if I should be using names on a public platform, but yes, there are a lot of students who've done, and you will find a lot of testimonials and the reviews. The endless students, if I go and count, I'm just thinking the endless students have done super well. And it's just about the keenness of interest. Okay, it's about the keenness of interest. I tell you, the different professions. Some of my students have interest in various things. One of them is a photographer. One of them has an interest in astrology and is a very good astrologer. His family, in his family also others are astrologers, some of them. Then there are students who are coming after experiencing something in the brokerage industry, getting some experience, but they want to work them independently. They joined and they left that job and they started doing trading, etc. Right? So that kind of thing. A lot of students are there. I mean, there's no limit. I can make you talk if you want to with someone similar to your experience. Yeah. Okay, let's illustrate. Ankur is asking, let's just talk about supports and resistance on in the case of Nifty. Okay, let's just take Nifty chart now. Right. So I'm taking up the chart of Nifty. Right. Let's understand which are the points from where we saw that the recent very strong interactions. 10,980 was a very important part. Okay. Yesterday the high where Bank Nifty was, just I'm drifting to Bank Nifty, little similar chart, but I just wanted to iterate. The yesterday's point was well under my radar, as these points have been super important at earlier levels. Okay, so what earlier levels have they been important? They have been extremely important over here, over here. Okay, so you have to see where they're tested, where they are showing you evidences multiple times. And this is just one part of the story. How a market is approaching with what kind of price mechanism towards the support and resistance, how to read that is another part of the story. So there will be times where there will be false breakouts, right? Now, if I go too deep, I will explain things like there's a complex correction of a B wave, Elliott waves. I can go in further details, but keeping it simple, there can be false breakouts. Market breadth needs to be seen very perfectly. Market breadth is something which is very important. Like today morning, when we were opening higher, I had a very good conversation with my team. I just told them that, see, right now the market breadth is not reliable. So even if we see some structure, we're going to be sticking to specific stocks, right? So market breadth was similarly, market breadth on the daily chart was very weak when we were over here. The false breakout happened and the price is dragged completely towards the lower end of the range. The lower end of the range, if you see the 10,550, 530, 580 zone, right? This zone has been very important in the entire span of time over here in the last year. These zone 550 to 580 have been very important last year also. So you see that how the support will serve for a very long time, right? It will serve for a very long time. And I've been tracking this support since the early part of 2018. This particular level I've been tracking since early part of 2018. So yes, there is a play of strong support resistance and the volatility crunch we are seeing on Nifty. We are, according to some of my indicators, so somebody had asked what indicators I do. We do trend indicators, we do volatility indicators, we do momentum indicators in the course. So in the course, when I'm doing these different types of indicators, I give a very creative perspective and not something which you'll find very easily in books or Google searches. So according to one of them, something in a very big manner, a very big movement is likely to happen, right? Some of the indicator videos you'll be able to see on the in the YouTube channel as well, right? So if I mix up everything put together, I really say there's a volatility crunch. This could continue, but eventually this volatility will lead to an expansion. So we all need to see how the breadth is going to drift, how are the stocks going to participate, which sector is going to participate. We have to see what are the indicators in place as the moves trigger. Maybe the some of my indicators will start calling for a move before the big moves happen, much before. That is how I see them. So this is my perspective, right? Any other questions regarding the same are welcome. I hope I've answered you. Okay, Pratik, I suggest you leave your number so we can get in touch. I think I'll answer that clearly. Okay, Mr. Kamlesh is asking a list of books for technical analysis. Well, there are many books for technical analysis. If somebody does not want to join a formal training and does not want to learn in terms of mentorship, then they can go for a lot of books which are there. Particularly, I would say you can start with a John Murphy, simplistic books with simplistic way of explanation. You can start reading that, and the other books, like I would say everybody should read Trading in the Zone, right? That is very good. You should read About Traders by Jack Schwager. You should read Market Wizards by Jack Schwager. You can, if you want to go to the Bible of technical analysis, you can go to Edward and McGee. Okay, so how do you execute the trades which you suggest in your Telegram channel? Okay, Mr. Kumar, I'll make it very clear that the trades which I suggest in my Telegram channel, all of them, all the time, at the time, all the same time, I can't do, right? So this is me and my team work very hard to make it as close and accurate as possible, right? I take sometimes trade which I don't post on Telegram also. So that is not a very linear relationship because I'm not a machine, I'm a human being. So obviously that will not be a linear relationship. Uh, Depending on the strategy, I will execute it lightly. Sometimes I have to be very spontaneous because the market is reacting very suddenly. Okay, then you have to be very spontaneous. You don't have a lot of room of flexibility of posting each and every action you're taking on Telegram. So Telegram is there to demonstrate to all of you what the power of technical analysis can do and lead you to, right? So that is what I'm saying. I do execute many of them, not all of them, and some I execute are not on Telegram also. It's like very different this thing. Yeah. Neeraj is saying, so I am finding a way then you for your Telegram channel and the knowledge sharing nature. Thank you so much. Please don't stop your channel. I will not stop my channel. Definitely I would not stop. And I would definitely encourage all of you that you do if you have sincere interest, want to do something big in the market. And when I say big, I do not mean you come to me and you learn for 2 days and in 2 days you learn. It's a 15 session course which goes on for 2 months, Saturday, Sunday. Somebody is asking about recording. Yes, recordings are available till coming Friday. But this course is specifically so that people who are really inspired for learning and creating a long-term growth and perspective towards the market should join. So if anybody is interested to join, you can kindly put in your number. I'll take up some more stocks and then I'll take up some questions, right? So I was having a look at stocks like Aisha Motors, right? The candlestick which it had made 2 days back, okay, was a bearish engulfing candle, and the ideal bearish engulfing candle would actually come towards the end of an extended move. But I'm considering how the movement of this move from this level to this level has happened. And I made some trend lines around it. So considering all that, I personally was very bearish on this particular stock since this candle was made on the daily chart. So one time frame is giving me an overall flow, and the other time frame helped me to understand how this breakout has come out of this. Now there's a phenomenon in technical analysis called throwback, and many people call it as a bull trap or a bear trap also. One of the things which happens is that the price goes back against the direction of the trend and then goes back inside the trend again. So this is what happened the next day, and there was a serious fall yesterday, and eventually we did make new lows. So lower low has been made. This is one of the things which was told. Which I had done in my homework. It was not told in Telegram. Okay, everything, as I said, is not able to. I track so many stocks. If I give all of it in Telegram, then people will get confused, right? So this is one of the things which was there. UBL was an interesting morning trade which I had taken. So UBL was a very interesting trade I had seen. So these dips were very interesting on the smaller time frames, right? And as I continue to speak, also it is mildly bullish on the daily chart, on the hourly chart. And if we get the close, which is very a close near the highs of the day, which will make it a full green candle, it would be mildly bullish on the daily chart also. So you have to categorize as per your technicals what exactly are we looking from different stocks, right? Every stock will have a different rating basically of how it would be mildly bullish or majorly bullish. Like I was talking about Nifty, I said the breadth is very weak. So today morning, I was discussing this with my team. Okay, I was discussing it, and we have a group called an inner circle group. Okay, where all the students of the past are in touch with me. Every month we have a meeting which is called the inner circle meeting. It's all for free for life. Those who do the course, once the course is done, they're put in that group. There are interesting discussions going there also. Just to tell you my general idea of discussions and how much to be able to create a Telegram channel, have so many people over here talking to me, how much hard work is given, and I would also credit it to my team who cooperatively with me help me to get all these things across to you. I would also credit to all my past students because they are also very active with sharing and generating trading ideas and sharing with each other. So sometimes the group and the community as a whole joins as a scanner for others, right? My YouTube channel name is Mohak Pachisia, and that is my name. So on my name only you have. I just show you my YouTube channel, and I will also show you how you can go to the various videos, right? So guys, this is my YouTube channel, right? Uh, so you can, once you go to the YouTube channel over here, you can go to the video section of the YouTube channel. You will see there are a lot of market videos, right? As you go back, you will see there are many which are webinars, many which are topic specific, many which are, somebody was talking about testimonials. You can check out a small testimonial video, although it's an old one. There you can go for the longer webinars, right? These are specific topics like the mystery of volumes and open interest. This one I was talking about, right? A lot about trading psychology, execution, basics of technical analysis, indicators. We're talking about live markets. Even this video will be there. So there are lots you can check out and learn from. Right. This is what I would suggest you do. And as I was talking about the breadth and tracking too many stocks, all the time you're not just tracking stocks for the heck of it. Many times you're just tracking stocks because you understand an important factor that if you are tracking stocks, you are learning. You are being able to expose yourself to high profit. Like for example, I do not trade UPL that much, okay, but when there is a high probability pattern which was in place, I took a trade on it. There was a high probability pattern on various time frames, and my Elliott waves also were supporting it. I took a trade on UPL and I held on to that trade for a few days. And even in a very uncertain market, it worked out. So when I'm tracking stocks, it does not mean that I have to trade the same things every day. Say for example, I track both Tata Steel and Jindal Steel. I have not been able to get a very specific trade on Tata Steel, although I could have, but I already had some position at that time. But Jindal Steel worked out very beautifully for me, as high probability trading setups really led it to good moves. And as I said earlier, the different phases of the market will invite different perspectives. So you have to be ready for those things, right? I'm going to answer some more questions. It's a very nice long session we are having. Uh, okay, I will elaborate on the course, Mr. Ankur. So, first thing which I'll talk about, it's a 15 session course. You join the course, you are going to be with me across Saturday, Sunday, Saturday, Sunday for 15 sessions. That would be 2 months. 2 hour sessions are there. Sometimes it exceeds, generally it doesn't go down, and sometimes it exceeds because the topic is interesting, the questions are interesting, etc. Right. Then we also see that there are students who come from, some of them are very new to technicals, some of them are little learned. So we start from a very basic platform on the first session, and by the 15th session we have raised our bar to a very advanced level of technical analysis. Over a period of time, obviously not just the past market examples which will be very important, as we do more concepts, the current market examples also start becoming very interesting. So you learn how to track the market over this 2 month period, along with me guiding you over there, right? So on Saturday, Sunday, whichever day, suppose you miss or you want to repeat the class, a recording will be available to the students till the coming Friday. There are handouts which are shared, which are topic specific, the books which are shared by the end of the course. The very interesting things, and interactive course. Just like this webinar we're having on this platform, the course is also on this platform. Yeah. So any other questions regarding that you can ask. I think I've elaborated enough. Once you send us your number, my team will get in touch with you. They will send you the course details, etc. Somebody is asking about the fees. The fees is 12,500 rupees, and you can pay 2,500 and book your seat now. The rest you pay 1 week before the course starts. Not a problem. But yes, this 12,500 rupees is a very reasonable amount. Yeah. Um, I'm getting a lot of. Okay, what are the lines on the right of your screen? On the right hand of my screen, what are the lines? Let me see. What are you talking about? I didn't get. Which line are you talking about? I didn't get. The right hand of my screen. Maybe there's some. I don't think. You're talking about these lines. I don't know what you're talking about. Can you be a little more specific? What lines? So I hope everybody. Okay, somebody again asked about YouTube. Okay. 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 So first I'll take this. What about commodity? Srinivas is pretty vehement about commodity markets. So I'll just tell everybody, whatever we are doing and we are understanding, okay, whatever we are doing and understanding from the subject itself, it is about technical analysis, it is about mass psychology, it is about the play of mass psychology in a structured, repetitive manner. It is applicable to all trading asset classes. Some my students trade only currency, some students trade only commodity. Okay, although the most of the examples will be there on stocks because there's a broader audience and broader set of stocks. Yeah, so that is how it is done. So commodity, some examples will be there, but yeah, if you want to trade commodity, you will be able to do it with that knowledge. You will also be able to understand uh, in the sense that different time frames. So everybody's lifestyle and personality and capital size, as I said earlier, will be applicable to different style of trading. So if you want to trade intraday or only intraday, then you can do just that. You will get a lot of knowledge. Out of that, if you can apply, practice everything, choose what is best suited to you, apply how to do that. I will guide you, and then you will see what your results are. But you need to structure and make a business model and a plan and then go about trading. Are you getting the point? So yes, all kinds of asset classes and different time frames you'll be able to study. So Amit ji is asking, Arpit ji is asking, uh, reshare the books. Okay, you can go for Arpit, since you're in the course, by the end of the course we will share some exquisite books. But I would say from the basic point of view, you can start with John Murphy's books on technical analysis. You should read on trading psychology, trading in the zone. You should read uh, on the history of trading and traders interviews. You should read Market Wizards by Jack Schwager, right? These are very good books, and there are endless others. Honestly speaking, there will be a big list if I start. Some of them will be very expensive and difficult to get also. I'm starting with a basic. Go for John Murphy. And if somebody really wants to go deeper, buy very expensive books and give a lot of time, then there are very thick books which are there, which are very, but very detailed. Okay, which will be given to you by the end of the course, right? So that will be there. Uh, Nikhil is asking, I'm taking sannyas for some time. अरे निखिल जी आप संन्यास को ले रहे हैं. It's okay to take a break in trading. It's okay. It's completely healthy. In fact, one should choose and take this break. It's okay to take a break in trading. And what will happen is that it will relax your behavioral habits. If you have behavior habits which are not healthy, it will relax those habits. And then you can install new habits. So it's okay to take a break. You don't need to feel guilty or regretful of anything. Okay. And that's good that you're taking a break. And yes, I have spoken. I think you're the same Nikhil Agarwal I spoke to on the phone. So you have shown your interest in the course. If you want to join the coming batch, you can join. We are starting on the last week of March. So we're going to start on the 31st of March. And you can just book your seat, all of you, right? Price discounts everything. Please explain these terms. Mr. Neeraj is asking this question. Price discounts everything. Okay. So what do I mean by price discounts everything? It's a tenet of Dow theory. Dow theory has various tenets. The six tenets, out of which the first thing is that price discounts everything. Right? Mr. Rupesh, we have a lot of people to take care of, handle, and there is a current match which is going on. So once that gets over, the morning slot will be empty, and then only 31st we can start. So it's not really possible for me to start early. But as I said, Mr. Yadav, you can go and check out all the YouTube videos and learn a lot before the course starts. I know you have almost registered for the course, but we'll definitely start on 31st. Don't worry. That's the announced date I told you also, right? So then, sorry, market discounts everything. Or when Dow theory, when it was mentioned, the tenets of Dow theory, it said that the average discounts everything, the Dow average. Yeah? What it means is that at any given point in time, okay, there are people who are buying and selling, and what are they buying and selling on the basis of? Suppose, on a very erratic note, I'm saying, okay, suppose tomorrow there's a huge, suppose financial crisis which happens in US, and just like it happened in 2008, etc. If that kind of financial crisis there, for example, the all the world markets will go down, and so will India in high probabilities. So when that movement will happen, it will happen because of real buying and real selling. So markets are always absorbing any information in a way. All the participants in the market collectively are absorbing enough information. So if there's a very important information, a lot of sellers on one side will be creating the pressure to push the price down. So that is what is meant by that tenet. That every point, at any point in time, all the information which is out there and the expectation of the economy is discounted. This statement is part technical in nature and part fundamental in nature. Part fundamental in the nature in the sense that fundamental analysis, true fundamental analysis talks about long-term investment. And they think that the market is mispriced at times and it would lead to a perfect market. But Dow theory, Charles Dow is the father of modern technical analysis. He says that it averages will discount everything. That means that right now market has discounted everything. Getting the point? I hope I'm clear. Right now market has discounted everything. Yeah. So guys, any other questions? I think I've completed a lot of questions. Some people are asking about stock specifics. So let's just go about a few stocks. As I was talking about UBL, we see the nature of trend, how it is trending, okay, and how the step-by-step things take place. This is a 15-minute time frame. Okay, now you see how the structure of the price movement is happening. There are a lot of other connotations to it, but if you just see how I was talking about the chart on UPL on the daily chart, right? There are structural connotations which happen on a different way. Okay. When we spoke about volumes, again I said that when the recent past volumes are compared, we can see how this high volume candle is much higher than the recent past volumes. The recent past volumes are lower. This is trying to show us that in the time of low volatility, the market participants were not very active, right? The market participants were not very active. And when there's a volume, there are a lot of activity which is there, and therefore this trend is reliable. And of course, more things will be there in volumes, right? So as I was talking about Nifty also, that immediately in the morning we had a gap up, but that gap up never gave a follow through. In fact, we have corrected a little bit from there. So the market depth is also important. The technical analysis is very important for you to develop and understand strategies. Say for example, uh, if I start, then many of the students are doing really amazing stuff. A particular student went long on Dr. Reddy at this zone and he held on to the trade almost at the highest levels or just before the highs. The same student went short yesterday, and again he's doing very well by tracking one stock technically. The same student tracks a set of stocks, but he is very well versed with the times when trends are very evident. Okay, the same student went long on TCS a few days back and he held on to it for 2.5 days. So that is how a student develops a style with a group of stocks, understands, or sometimes the group of stocks keeps changing for student. Like some of my students have migrated to trading a lot of steel sector stocks in the recent past because the developments on the price chart were very common. Just before that, some of my students were trading a lot of IT. So there's a little this thing. Srinivas ji, yes, commodity is also, as I just explained, commodity is also something you'll be able to trade with technical analysis. Yeah. Okay, more questions are coming. Jay Prakash is asking, please do a course in Hindi. Mr. Jay Prakash, you can contact my team directly. You can send my number over your number over here. We will do the needful talking. Yeah, don't worry. We just had a batch in Hindi, which I started last Saturday. I've talked about it again and again on Telegram. So just you can send in your number, right? We'll talk about how you'll be comfortable in English and how the things will be and what the details are. You can message your number over here. Thank you. Rupesh, okay. Yes, you will get, okay. Jayaprakash is asking what happens after good results, many companies fall. As I said, the understanding of price mechanism is that real buying and real selling will create price moves. Good result or bad result. If, say, for example, in case of Reliance, okay, the result which came out who had come on the day before, it came on the Thursday evening, and a very major move happened on Friday and the next coming Monday. So it is not necessary that there is a magic wand, the result is good and with magic things will happen. You have to wait for your setup to come. When it came to Maruti, I had already spoken on Telegram that, you know, from these levels I was talking about this being extremely good sell, and look at how the move has followed through. So if you are some of the students who are positional traders, okay, they can gauge these kind of moves. One of my very famous trade in Gale is out there. When I was talking about Gale to go short over here, and some of them people made have made more than 1 lakh rupees on the trade. And these are not paid calls; these are just free trading ideas I share. And my personal prerogative is that everybody should learn and do things on their own. That is only how long-term growth can happen, right? Uh, okay, guys. So what I will do is I will sign off today. And some of you are asking for my number. So after market hours, if you want, you can contact me. I'm sending my number just only because I encourage interaction. Generally, if somebody has something really personal to discuss, they can do this. It's okay. Yeah. The rest who have sent in your numbers, thank you. Right? We will talk about. My team will contact you. You make me talk to you also if needed. You can register for the course. So, guys, long story short, today has been a very good day. We have discussed and had quite a long, interesting live session, right? And we will keep discussing and we'll keep having such live sessions as and when there is one person I get time. Okay, so we'll have interesting things which will follow through. Keep following me on Telegram. Thank you again for all the following, coming here, spending time, even the numbers that you have shared and the interest you have shown in the course. Thank you for having the openness for observation. The skill required for trading is not a skill based on only one thing, right? It's based on multiple things. So we're going to explore. I hope you can see me clearly. We're going to explore those multiple things together over the course of time, and I would encourage all of you to go through my free YouTube videos and learn a lot from the same. So I don't know if you're able to see me at the moment. Is my camera on? Yeah, put my camera on. These days, a bit confusing. Okay, so thank you so much and namaskar. I will see you. Keep in touch. Take care. Thank you, everyone. Goodbye. Enjoy. Bye bye.